Hi everyone, and welcome to Trades of the Week with myself and Keith Sullivan. We had a a lot of fun last time, so we thought we'll do it again while Marcus is in Greece as well. And actually, I am calling in from Greece as well. So and which is interesting. We do whatever it takes here. And Keith, I don't recognize where you are. Where are you? Where are you, buddy?
So we basically got an office refurb happening right now, and I'm sitting in the staff room where we sit down and have lunch. So I'm bringing you trades of the week from our staff room. As Dennis says, we do everything we can to get this out to you on a weekly basis.
And this is the beauty as well. You can trade from anywhere, right? Even though I'm in Greece, I'll be trading. It doesn't matter where you are in the world as long as you have a laptop and a solid internet connection. And why not get a tan while you're at it? But today, we have something very, very interesting to discuss. We want to get this out to you as soon as possible. We're going to be discussing why did the crypto market go from 30,000 up to 41,000 in 2 days? Or this is Bitcoin. And what is happening in the stock market? Why are we seeing all-time highs? And not only that, what companies are we diversifying into? We are getting into a rock solid mining company today as well, which might be very interesting. So I think let's dive right into it. So now we're going to this, and we're going to go through some of the stocks we looked at last week as well. And I just need to mention here, Keith, your biceps, have they gotten a little bit smaller, or is mine a bit bigger?
No? Definitely not got smaller. I'm just catching up with you. I'm catching up. You're a few weeks ahead, but I'm catching up with you. We can measure them now if you want.
Maybe we'll see. We might even get Keith to take his shirt off, but well, maybe not. We'll see. But let's go into it. So the first one we're looking at here is Alarm, right? That's ALRM, and we locked in 1% profit here, so that came down, tumbling down, and we have locked in 1%. So that took our stop loss out. I even think this was last week when it took us out from this. So just to remind you that happened. The next one was BTRS. We were selling short on this. We've been in this for a long time, and we were looking at this this was last week, the 20th, when we looked at it, and we put the stop loss down a bit. It came up, took us out on the stop loss, 2% profit, or even actually it's a little bit more here. Let's take this up and see. Well, yeah, it's actually straight around 2% there, and then it went down again. So we shouldn't have taking the stop loss up that much. It was almost like the market was watching us. But Keith, are we using emotions when we're taking profits?
We never use emotions, we use logic. And that's why we teach a quite systematic way of moving your stop loss down, right? Because you don't allow emotions to get involved. When there's rules, then there's no real emotions as long as you follow those rules.
Yeah, absolutely. But then again, we're only human. So emotions will come into play. That's why it's so important to have a peer group. Now, what I want to know is, did you take profits from this? Comment below if you took profits on BTRS as well and how much profit you took. So that's another 2%. Let's hear that. Marcus is not here. So we are actually allowed to milk the cow. What do you say, Keith?
Moo!
Ah, that's a good one. He has been practicing. All right, so next up is XENT. That came out of nowhere, took us out a 1% loss. That's boo and not moo. So that's a 1% loss there, but that's how it goes. We only ever risk 1%. MRK, still around our entry point. So we're around break even. So do your research if you like this. Maybe we get a downward swing in the market. We'll go into the market update in a moment. And then we have PGNIY as well. So that's Progny Inc. We looked at this last week. We came into it and now we're in a slight loss. So do make sure you do your research. But I would take the stop loss. Let's zoom in a bit here. The stop loss definitely underneath this area here, just to make sure that if it goes down there again, the market's been there before, we want to make sure we don't get stopped out too easily. And remember, if it goes to the stop loss, we only risk 1%. So no damage done there. And then the last one from last week is VTWO. This is Vanguard Russell 2000 ETFs, around an ETF, kind of a basket of shares of the 2000 biggest small caps. So we're canceling this because we looked at this on the 20th with this big candle here, and it was just gone up too much. So we wanted it to come down again. It never did. So we're canceling this order just because we didn't get the risk reward ratio. You might have learned by now, we're looking for, what risk reward are we looking for, Keith?
3-1 all the time.
Or more, but 3-1 the least. So then we have 3 new ones for you as well. But Keith, take us through what is happening in the market.
So into the market update, once again, we are still looking at the economy, and America are the driving force, obviously, of the overall market that we're looking at. So one of the biggest news that came out in America is the jobless claims. Now, these are the people who are claiming unemployment benefits in America. And this jobless claims has actually increased in 1 week, 13.8%, which is the highest it's been in 8 weeks. So what does that tell us? That could give us a clear indication that unemployment in America may be getting a tiny bit worse. Okay, so we will find that out on Friday. Well, the first Friday of every month, the unemployment rate comes out in America. So we wouldn't understand, has unemployment increased or decreased? But from what we're seeing with the claims, it's increased over the last couple of weeks. So now what does this mean for the market? It could potentially be pushing the Fed into a corner, because obviously the Fed, what they want to do is they've stimulated the economy by bringing interest rates lower. It's caused people to spend more into the market to bring the economy up. And now they're looking to kind of hold the growth, hold the bubble, okay, by slightly increasing interest rates and decreasing stimulus packages. But with unemployment increasing, this could push them into a corner where they potentially have no way to increase interest rates, and they must hold the stimulus packages as they are for the time being. So this could be a good thing for the stock market, because if they hold the interest and increase or carry on with the stimuluses, we will still see a bearish move in the market. As you've seen, the major indices now once again are making all-time highs. The market's gone from being extreme fear to just fearful. So they're getting a bit more confidence into the market compared to last week. So I would expect on Thursday, the FOMC will come out and say, we cannot do anything with interest rates, and they're sticking to their plan of the end of 2022 to then begin to increase it. And then they would also talk about stimuluses and holding stimulus packages the way they are. Right now, the way that they're holding the market up, unlike a couple of months ago, instead of pumping money into the tech companies, they're pumping money into bonds, which is holding the market up. And it's something known as tapering in the market. So they're just using bonds to hold the overall market up and pump money back into the stock market. So that's number one, the unemployment rate. For me personally, it's just an indication of nothing will change for the remaining part of probably this year, in my opinion. And we will still see markets trying to make all-time highs. The next piece of news that has come out is it is August. Shock. Who believes August was just around the corner? It feels like 2021 has gone so quickly, but we are in August. And what does that mean for us? August is holiday periods for a lot of institutions, and they will be looking to close out positions. Now, once they close out the positions, we could then see a bit of a short-term bearish move in the market. So what we would need to do in August is, number one, kind of limit the long positions that we are looking at, because that could potentially mean the trend may break, but also increase our portfolio for VCAs, because if we haven't got VCAs and we haven't diversified, we could potentially see a bit of a drop in the market due to institutions selling their shares and closing positions, which gives us a great buying opportunity. So for me personally, in August, I do limit the amount I trade. I increase my VCAs, and I also look at my trading plan and back test a couple of my trades throughout the year and why they lost and what could I do better. So that is the major news which has come out this week. Dennis, have you got anything to add around the stock market?
That is incredible, Keith. I must say, first of all, you might think that we have a dress code. We actually just turn up like this, dress the same, and maybe
we didn't text each other in the morning. No, we didn't text each other.
And we have the same background. It's perfect. But also, I just want to mention before we go into anything more there, we will send out some pictures of the B-roll, what is happening in the IM office. They might appear on the screen here somewhere, but just so you guys know what is happening, we're going to make it a lot more awesome. I don't know if that's how you say it, but I think so. But what is happening in the market? I mean, what you just said is great, Keith. It's very technical. It's very kind of stock market language, which is great. So a lot of people might go, "Holy moly, what does that even mean?" Well, the good news is you don't need to know what it means. the market might go up, the market might go down, right? There's one of those. One of those two things will happen. So if I ask Keith, what is your crystal ball saying? He's going to say, aha, it's going to go up or it's going to go down. We just never know. So with that in mind, we're going to look at a few new opportunities. But just like Keith said, they have been talking about raising the interest rates for so long. And what's going to happen is if they raise the interest rate too much, people need to pay more interest, can spend less, and that might be a problem for the economy. But the last thing I want to mention, this week, we have the 5 big, right? The 5 giants in the tech world. And we have Amazon, Facebook, right? And a few of those other big ones that have their earnings period this week. So keep an eye out for that. They're expected to be tremendous earnings, but that will push the market higher or lower. Because those 5 big giants, they actually turn the market capitalization of the entire market. They're a big part of it. So whatever they do, the rest of the market tend to follow. So keep a close eye out for earnings, how well those companies are performing. But what we're doing now, we're getting into Casey. We have looked at this before, I think, and this is Casey's general stores. They're doing amazingly well, going more digital as well. And we got in yesterday on this candle here, boom. Actually, where it opened, and it actually closed around that same space. So do your research. You could get into them with a market order. We have a great risk to reward ratio. This is more than 4.6, and it even has more room to go up. So Casey is the first one. The second one is LFVN, and the alphabetic thing is what is it, Keith? Is it lemon, fork, Venus, and Nancy? How's that? So
it works for me.
We're trending here. We need to be hedged here in case the market turns bearish. We have a nice reversal candle, a nice red candle here if we zoom in, and looks to be a good risk reward ratio as well. I think even we could take that a little bit lower. I think this is a bit too high there. Do your calculations according to the Buffalo strategy to have a good risk reward ratio, and hopefully now it does go down all the way. So cross your fingers for that, because we never know what's going to happen. But in the worst case scenario, we will only lose 1%. So the last one here is AXL, American Axle and Manufacturing Holdings. Stop loss well below, right? So we are a bit safe there. And we have a risk reward ratio of more than, 3-to-1. And reward 3 and risk 1. And that's exactly what we're looking for, like Keith said. So we have 3 solid opportunities for you here. Do your own research. We are placing the orders on this one. We have this is called a doji, for those of you who are interested in technical analysis. And usually it turns out to be a reversal candle, which means it might go higher from here. But do your own research on that. So from one thing to the other then, let's dive into the crypto market. Now, there's some amazing news in the crypto market. And if we start with Bitcoin, we can see here that Bitcoin is still ranging in this region we've been talking about for so long. And it actually just got up to 41,000, and some exchange a little bit more than 41,000. And we're still waiting for a breakout here. So no reason to be extremely bullish, no reason to be even bearish, because we are seeing a bullish push. Some are saying that we're taking out, it's just closing all the stop losses, right? So a lot of people that were short, betting on the market going down, were in. And now maybe the market came up, taking all those out. I think there was billions of dollars getting liquidated, which means people got stopped out, lost all their money, and then maybe just to go down again. Or is this the next wave in the next bull market? Will we go higher and revisit the $50,000 and $60,000 per Bitcoin? Only time will tell. However, I know that Keith has the answer. So what do you think, Keith? What is happening here?
Well, the answer wise is nobody knows. Once again, we haven't got that crystal ball, but we just need to be a bit more proactive than reactive, right? And what does that mean? It means if one of the two scenarios happen, we need to know how to deal with it. So if it breaks below the support, what are we going to do? We are going to buy more at cheaper prices. If it breaks above the resistance, what are we going to do? We're going to look at milking the cow, as Dennis says, because we should be in a FCA or CCA opportunity and generating some sort of profit. So always be proactive, especially with investing in crypto. So you know, if one of two things happen, what should the outcome be and what should my focus be? Now, for me, I did see the retest. I would expect another bit of resistance occurring up here. So next few days, I would expect it to try it again, just as we have seen on the beginning of the oscillation where it triggered, it fell, and then triggered it again. I would expect some sort of retest there. But as Dennis says, right now, it's the short push, as they've called it, where they have liquidated over leveraged traders who were selling short in the market. And this is naturally happening because they are taking traders out who are overexposed, over risked in the market because they don't have a strategy and they don't know really what they're doing. So don't be one of them people. Follow the rules, follow a strategy, have a structure. Okay. But once again, we just have to wait and see. We need to see what is going to happen. If we see a break above, once again, it's a great signal that maybe the market may be bullish and look to start making new highs.
However, there are some really good news in the market. Amazon, there's rumors Amazon might be adding crypto payments. This is Amazon we're talking about. And that, of course, gave the market a boost as well. Elon Musk said in a conference, Tesla is not selling Bitcoin. They might even accept Bitcoin again. So there's some really good news in the market. And if Amazon would add cryptos as a form of payment, it will really enhance, of course, the adoption of cryptos. Cryptos are definitely here to stay, so do your own research. But we do always need to have a plan. That is so important. So we need to know what's going to happen. If it goes up, we have a plan. If it goes down, we have a plan. If it goes sideways, we have a plan. So you need to do that too, all right? And actually, we actually have a crypto mastery workshop. Is that what it's called, Keith? Crypto workshop coming up, right? A 2-day full on where we teach all our strategies. And we actually have a contrarian momentum strategy where we take advantage of the short-term movement. We put a stop loss in today for 13%. And that's over, I think, 1 week approximately. The 13% in 1 week is not bad. And if you are in our club already, make sure you comment below. Did you get into those trades that we made? But if you would like to come to a workshop, make sure you comment below, right? Comment workshop below. And maybe there's a button. No, send an email. There will be an email in the comment area, which you can send to, I think. And it's matt@investment-mastery.com if you would be interested in looking into our workshop a little bit. Anything to add to that, Keith?
The only thing I can add is if you haven't been proactive in this short-term bearish movement in the market, the workshop is really going to get you kick-started because we're going to be placing positions there and then on the days. While learning the strategies, you're placing the strategies. So you are being very proactive while learning. So if you haven't got started with crypto as of yet and want to, this is going to be a great step for you. And what we do teach you is a strategy, a structure, and this will try to help you get away from that emotion side of crypto, because crypto can be very emotional. I've experienced it over the last few months. So it can be very emotional, but think of it logically and not emotionally. And we should make good returns with this. But it's easier said than done, as Dennis says.
Absolutely. It takes time to master and a supportive environment, which is so important that you keep coming back to these YouTube videos, the trades of the week, because that's what we do as well. We go to our mentors and then we get some inspirations and motivations to last through the next week. And that's what you need to do as well. But if you look at the crypto market, we have Ethereum as well, is doing the same. Like they're all moving in accordance with Bitcoin. We're getting at minus 58%, and we are in a slight loss still, I would say, around break even. XRP tried to rally a bit yesterday as well, and they're all kind of hovering around a little bit. No one of them has really moved a lot. We have Matic. We managed to get in at a lower point last week, very fortunately. So it's very important if you are doing the small cap and CCA strategy, that you do it all the way down and add more money on the way down as well. Very, very important, because now when the market turns, it doesn't need to go up that much for you to be in great profits. So on Matic, we are actually in profits at the moment. So I would even say that we are around 20% in profit. Not enough to milk the cow. Maybe we can milk the baby cow, but not yet. But then we have as well, Maker did rally a little bit as well, right? We're a bit in profit on that one. Solana, an amazing project. Even Link, right? It's a great project. And we are trying here to really build our positions in these solid projects that we believe cannot go to zero. Very important. So once again, we're not adding any cryptos this week either, because we're in so many positions. We want to see the market go up now, right? Before we take any profits and add anything new. And if the market were to fall a lot more, then yes, then we would add some more cryptos in there as well. But now we're just going sideways pretty much. And once again, we're waiting for a breakout here in Bitcoin, hopefully above the 42,000 mark, up to 45, 50,000. But if it breaks below, we need to brace ourselves for some lower prices, but we have to see. But one thing I want to show you as well is the moving average, right? The moving average is the average price movement of the last 200 days. That's the one I'm going to have a look at. So you get this line, right, based on the last 200 days. And I think that could be a level of resistance. So now in the bull market, the price is usually above the 200 moving average, as you can see. But when we break below, it could be the start of a bear market. This is how a lot of people see it, a lot of technical traders. So it could be that we go up to 45, we test the 200 moving average to then move down. So keep a close eye on the moving average, but I do think it's possible that we go up and try that. If we were, however, to break above it, then it might turn to support again, and we could see higher prices. But just do have a look at the moving averages as well. So crypto market is exciting. Let's hope Amazon is adding cryptos to its portfolio. But besides on that, we are ready to invest more if the prices fall. If it goes up, we're ready to milk the cows. So be ready to prepare that move and practice that key, because that might be where we're heading. All right, and last up then is the VCA as well. Before that, actually what I want to show you as well is the Fear and Greed Index. We're currently at 32, right? It was at extreme fear last week. It's the same as the stock market. We are at fearful levels still. So people are fearful. If the market is to head up though, it's going to turn from fearful to greed maybe. And when people are greedy, might be a good time to look at taking some profits off the table. But when it's fearful, we want to add to our positions. That is why we're adding around the 30,000 mark as we have been. So make sure you do follow the strategies. So then if we go into the VCA, we have Coinbase is the first one, right? And this might actually be a leading indicator for the crypto market we have been thinking. So if now Coinbase is to break above this level, it's also trading within this range here, basically. We have been getting in, and we are around break even at the moment. I hope it's going to go up now. I thought it was going to go a bit faster, like we've been discussing, but we're still in it. It went up 10% yesterday with the crypto market. So if we see a rally in the crypto market, then Coinbase is very likely to rally as well. So then we're in Dollar Tree as well, right? Dollar Tree, we want to diversify. Dollar Tree is a retail store. We're in cryptos, we're in retail, and it's currently doing not much. We are in a little bit of a profit, 3%-ish. Spotify is, we were up 11%. We're around minus 37 again. So do your research. You could get in a tech company. This is. And then we have also MarineMax Inc. We're in a bit of a profit on this one, which is nice to see. So we're up around 17% at the moment. So it is time to put the stop loss in place. We're probably going to put the stop loss a little bit below this last red candle here to maybe lock in around 13, 14%. What do you think about that, Keith?
Yeah, 100%, because now that we are in profit with VCA, we want to try and take the returns and compound them returns into a new opportunity, right? So utilizing a stop loss, what that does is it locks in profit, but still gives enough room for the market to move to then maximize our gains. So yeah, I would be happy at 13% on this one. And it's a really good company with really good fundamentals as well. So if it does then begin to drop again, it might be a new opportunity to get in as long as we have a new high that's been formed.
Yeah, and guys, comment below. We are doing this. We hope that you are getting into these as well, right? We are doing this because we're getting in, but we want you to make money as well, of course. So make sure you comment below. Did you get into MarineMax Inc. or did you not? And if not, why not? Maybe you need that supportive environment. All right, and next up is the boat industry. Then we have Pass as well, which is a silver mining company. And we're currently, it's still minus around 25%. So we're not getting in again. But if you're not in, make sure you do your research. Great fundamentals on this as well. Then we have Etsy. We're getting into profits on Etsy. We were a bit in a loss on that, but now we're up around 6%. Not enough to move your stop loss. We're looking for 15% before we do anything crazy here. TripAdvisor is moving up again. We are around break even, I would say, maybe even slightly in a profit. So we hope we can take 15% out of TripAdvisor. But remember, investing is weeks or months to years, really. So we could be in for quite some time, which doesn't bother us. If we get 15%, I mean, it would take more than 15 years to get 15% of your money if you have your money in your bank. Maybe even more than that, to be honest. Well, a lot more because it's very, very low. So we're very happy with that. And then SNDR, not doing much. Schneider National, got into that last week or 2 weeks ago. And currently it's around break even-ish. And ARCT, which is dealing a little bit with the COVID situation, hopefully. And they are developing a vaccine as well. So let's see how that breaks through. Currently around the break-even point, which is nice. So I think this could be a good one as well. There's kind of a wild card we threw out there. So make sure you research. It's more of a small cap than a big company. And then last week we added AG as well. This is my first Majestic Silver Corp. They go a silver mine. They make their profits, 70% of the profits out of silver, which is great. Currently a little bit in profit on that one, which is good as well. But the last one we're adding, and we're adding that today to our portfolio, is Barrick's Gold. All right. So Barrick's Gold is a gold company, and they have over 3 billion, right, in free cash flow, which means they're very cash rich, which makes sure they can stand against very tough times. All right, that's number one. Number two, they have great. They have one of the biggest gold mines in the world. So if gold goes up, could be a hedge, right, to the stock market and cryptos. So if gold goes up, Barrick's Gold will really benefit from that as well. And this was actually a company that even Warren Buffett got into last year. I think he sold his position, but he got into it at least. So what do you think about this? Are you diversifying to gold, Keith?
100%. So for me, I will always have one gold, one silver company for my diversification. And Barrick Gold is one that I have got invested right now because fundamentally it is very, very undervalued at the minute, with high potential to grow over the next 12 months, even the next 2-3 years, especially with the amount of cash they've got. Okay, so they can actually reinvest that cash to grow the business again, and they can cover themselves for any hard times they go through as well, right? So I do like Barrick Gold. Once again, undervalued. Warren Buffett likes this one as well. So Warren Buffett likes it, and he's done his research. It kind of has something to it. So yeah, I would definitely look at investing if you haven't with this one.
Yeah, and if it's good enough for Warren Buffett, it's good enough for us for sure. And of course, we need to watch the results as well. So if we look at them briefly, we had one loss and we took 3% profit on our Buffaloes this week. BTRS was the big winner with plus 2%. It stopped out there. So Buffalo account up to 41%. We have a stop loss on VCA, so we're probably going to take a little bit of profit on that next week as well. CCA and small caps are getting into profit, so hopefully we can milk the cow on some of those as well. So this was Trades of the Week, everyone. Please make sure you comment below. What are you getting into? And more importantly, what do you think about mine and Keith's matching outfits? And do you think those are a good look? If we should try to stick the same, or if it's better if we dress very differently. And do comment below as well. Do you want to join the workshop, right? Comment workshop below, or email matt@investment-mastery.com if you want to find out more. And we are actually looking to add a few other cryptos as well. So do make sure you tune in next week and the coming weeks as well for Trades of the Week, so you can find out more about them. All right. So once again, we appreciate that you watched Trades of the Week this week, and we look forward to see you next week when we're gonna go through everything, what's happening in the market, so you can stay on track and stay tuned with everything that is going on. So bye for now.